Learn more online at mwmfinancial.tax.
Now, from the Signature Bank Studios. This is Chicago's Morning Answer with Dan Proft and Amy Jacobson on AM 560. The Answer.
Top of the morning, Dan, and in for Amy this morning, Charles Thomas, former ABC7 political reporter.
Hey, thank you for having me this morning, Dan. I always enjoy being here.
I always enjoy having you. It's been a pleasure, and we still got a lot to do yet. We got to go through, what's happening in the markets, Trump's proposal for a sovereign wealth fund, and the tax plan that is being negotiated. Caroline Leavitt, the White House press secretary, had the broad outline that she shared in terms of what the White House is discussing with congressional Republicans.
So these are the tax priorities of the Trump administration that the president has laid out for members in that meeting today. No tax on tips, which is obviously a very public campaign promise that the president made. No tax on seniors' Social Security. No tax on overtime pay. Renewing President Trump's 2017 middle-class tax cuts. Again, these are the president's priorities. Adjusting the SALT cap, eliminate all the special tax breaks for billionaire sports team owners, close the carried interest tax deduction loophole, tax cuts for Made in America products. This will be the largest tax cut in history for middle-class working Americans. The president is committed to working with Congress to get this done.
Oh, okay. What say you? Sounds attractive.
Are you going to be one of the Democrats that are going to oppose this? That's going
right.
To be
you want to oppose the extension of the 2017 tax cuts, but you don't want to be on the wrong side of not taxing tips and not taxing overtime because you're
Social Security, man. Whoa.
Right.
No tax.
Right. But now you'll hear, though, of course, you'll hear all of these phony deficit hawks from the left come out now. Hey, it's going to blow a hole in the budget. The same people
Who blew a hole in the budget?
Yeah, the same people that put us $36 trillion, I should say, in debt, and that doesn't even include the unfunded liabilities. For more on this and other matters, James Perry joins us now, founder, CIO, Perry International Capital Partners. Jim, thanks for joining us. Appreciate it.
Good morning, Dan. Good morning, Charles.
Good morning.
So what do you think, those priorities, those tax relief priorities?
Well, I think tax cuts are going to be tricky getting through Congress because a lot of people obviously are against them. But I think the way it's being sort of presented, as the spokesman just said a few minutes ago, it'll be the largest tax cut for middle-class working Americans in history. And I think that's the key. I think, the Republican Party and Donald Trump in particular come under a lot of pressure, right, because of the idea that he's protecting his billionaire buddies, right? And that he has to kind of offset that sort of narrative a little bit. There's a lot of narrative out there in the market, and I think that's the key. The taxes, I think, are going to go down, Dan, and you're going to see more deregulation. You'll see a more balanced trade story, reduced deficits, and more importantly, you're going to see lower government spending, which would be good for inflation expectations.
Right. So, I mean, the impact on the tax side, twinned with the reductions in federal employee headcount and whatever else DOGE and the Trump White House is able to accomplish. I mean, that's what do you expect to see in terms of economic impact, setting aside the politics for a second?
Right. Well, I think the key to all of this stuff is the budget deficit, right? That's the first thing that really has to be funded in the bond market every day. The government brought in $5 trillion worth of revenue last year and spent $7 trillion, right? So your deficit's $2. And if you just think back pre-COVID, the government brought in $3.5 trillion and spent $4. So the difference then was, $500 billion, and now it's 4 times higher than that at $2 trillion. So I think the idea, and why the stock market is still, within really 1% of all-time highs, interest rates are coming down, the dollar's going up, and optimism in the markets and in the economy are high and rising, right? So I think the market and economists, generally speaking, are looking at an economy that becomes more productive as less money is involved in government programs, which really don't have much of a return on investment. And if you can move, $500 billion in the next sort of 6 months or 12 months from the public sector to the private sector, that's great for business investment. That's great for corporate profitability. That's great for job growth. And it's going to be good for the economy.
So if you're not in the market now, you should be.
I think the market is going to follow the economy, Dan, and I think the economy is going to do better in 2025 than it did in 2024. And I think the main reason for that is that the labor market in this country has never been larger, right? There's 170 million people gainfully employed in the U.S. labor market, and it's growing, and there's a shortage of labor. So I think if the economy expands, which I think it will, and inflation expectations begin to that trajectory of rise begins to flatten out, interest rates will stay here. The 10-year Treasury is still really at 4.5%. It was 4.80, a month ago. So interest rates are driving everything. I think if interest rates stay stable, inflation expectations come down, the economy will expand, and I think you're going to see a return in the stock market this year of probably better than 10%. The Dow already is up 5% this year, and it's February 7th. So we're in pretty good shape here. I think the stock market's going to do well, even though people realize it's expensive.
Mr. Perry, what will international financial doings have? Won't that affect what happens in this country?
Yes, Charles. The global economy is very intertwined, right? So we have to look at not only our closest trading partners here, Canada and Mexico, but certainly China and then Japan and Europe, right? Those are the top five. And the problem with the international economy is that, it's got the same problem that this country has, and that is that, governments have been spending an awful lot of money the last 5 to 10 years, and social programs in Japan and big spending in China and in Europe. The economies in the UK and all over Europe and Japan and China, they can't handle higher taxes anymore. So the economies are slowing in Europe and Asia. And I think that the biggest issue, Charles, to be honest with you, is that China has to continue to export deflation. And that's what they're doing. The economy is slower, and export prices of goods that come here into Europe are going down. So I think it's deflationary, to be honest with you. A lot of people disagree with that, but I don't think they're looking at the whole picture. If the global economy is slowing and deflating, that's a very, very good tailwind to the U.S. dollar, and money is coming into this country, not only in direct investment into businesses and real estate, but the stock market as well. So I think the U.S. economy, from a global perspective, is really pretty well positioned here.
That is an interesting take.
You haven't been too concerned about tariffs when we talked about it before Trump actually took office, after he won, but before he took office. From what you've seen over the last week, 10 days, and what may yet come, tariffs on EU exports and the like, are you still, generally optimistic that these tariff policies won't hamper the growth that you're projecting?
I think tariffs, if you just look at it as an econometric sort of PhD economics student from MIT or Harvard, you can look at the picture and say it's quite clear that when you raise tariffs, prices to consumers on the goods that they import from places like China, Mexico, and Canada go up. That is true. However, if you look at tariffs, that's really, what is the administration trying to do here? It's not about raising prices and hurting our trading neighbors, Canada and Mexico in particular. It's really about getting to balanced trade, right? The biggest problem, so we talked about the budget deficit at $2 trillion. The other big problem, the elephant in the room, is that, the current account deficit in this country, which is, the amount of money that's coming in and going out, That's $1.7 trillion in deficit. $1.7 trillion in deficit. And most of that is trade. So all the administration is trying to do is to get balanced trade agreements with our largest trading partners. Because when we have a deficit with places like Canada and Mexico, the administration correctly looks at it as a subsidy being paid by consumers and taxpayers in this country to those countries. And I think the reason the tariff issue gets a little bit sort of muddled and gets emotional is that, the fact is Mexico and Canada are dependent on exports to this country. My friend David Rosenberg said something this week, and I don't know the exact numbers, but something like 75% of Canada's exports go to the United States.
Right.
And something like 55 or 60% of Mexican exports go to the United States. So if those exports go down, what happens to the economies of Canada and Mexico? They can't handle the hit, right? So they're going to have to adjust and bring in some more goods from this country to their goods so these deficits go away. And if that happens, more money comes into this country, more money stays in this country, and the economy will expand.
But isn't China in much better position to take a hit?
Well, I'm not so sure about that, Charles. I mean, you got to remember that the Chinese economy is a closed economy. It's controlled by the government. They control the central bank. They control exports. They control prices. They control interest rates. They control their currencies. So if you look at the Chinese Communist Party, they have one major objective internally, domestically, and that is stability, right? They need to control everything. So if you've got something like 250 million Chinese factory workers employed in China, largely manufacturing goods for export to the West, if you slow down because of tariffs or something, what happens to all those workers? You got to lay off 100 million Chinese factory workers? That is really dangerous for a communist party that's trying to maintain control in China already. So I think China's a lot more fragile economically than most people think. Yes, they have lower wages, and yes, they manufacture goods pretty well. But the fact is, more and more countries or companies are leaving China because the Communist Party itself represents a political risk. So you're seeing countries like Indonesia and Vietnam and Turkey and places like that, and India, they're getting more and more manufacturing coming from China for exports to Europe and the West. And I think that I'm not so sure that means China's better positioned. I would say they're probably weaker now than they have been since the sort of pre-COVID level.
What did you think of Trump's executive order to set up a new sovereign wealth fund for the United States?
I'm not quite sure what I think about that, Dan. I think it's populist stuff. As you know, I do own some Bitcoin. I've owned it for a long, long time. I own it mainly because I want to watch it and learn everything about it. And I would rather own gold, to be honest with you. I've got a 10% position in my portfolio in the gold market. And, it's outperformed the S&P. So I think that I feel more comfortable with a solid hedge to the bond market and the banking system with gold than I do Bitcoin. So I'm watching this story really closely, and I'm trying to figure out how they're going to make it work. I think it's a work in progress, and what we have heard so far, I'm not so sure that when we get a sovereign wealth fund, if we do, that it's going to take the shape that most people think it will right now, meaning, it's full of $1 trillion worth of cryptocurrency or something. It's a little bit sketchy for me.
Well, I mean, that's one issue with it. The other issue is, this is going to be insider and self-dealing.
Right.
I mean, that's the real concern. A sovereign wealth fund, so you've got a political class that can invest we're talking about inside, sort of the insider dealing that Congress people do now with respect to stock picking and stuff, because they're dealing on information that's not publicly available, and this is why, in part, why Nancy Pelosi is such a impresario when it comes to stock picking. But I mean, this and now you want to sort of codify this in a sovereign wealth fund. I don't think this is a good idea.
Yeah, I'm kind of thinking and hoping, Dan, that, and this is how the way Trump kind of operates. He throws this stuff out here, like, buying Greenland and making Canada the 51st state and having a Bitcoin sovereign wealth fund. I think he throws it out there to be controversial and to sort of have people talk about it and think about it and say, well, okay, how do we do this?
Yeah.
You know what I mean? So
yeah.
I think it's a little bit of a shock treatment to get it into the narrative of the market. And I truly believe that if we do get a sovereign wealth fund, it's going to take a lot different shape than we are hearing about and reading about right now.
There's no real shape that's been offered. I mean, it's just sort of general, 90 days for Treasury and Commerce to come up with a sovereign wealth fund to fund a sovereign wealth fund structure and governance model, and it would be used to promote fiscal sustainability, whatever that means. I mean, so yeah, it's all very gooey right now, but I don't even like it in theory. But
yeah, it kind of gives me the creeps as well, to be honest with you. But I mean, that's how the market works. You remember, market news is laced with bias, right? And behind every bias, there's an agenda, right? So those agendas are financial and political objectives, and truthful, determination of these false narratives is obvious if you look at where the money's coming. Follow the money, right? If you realize who's funding the narrative, you know what the objective is. It's pretty simple. I think a lot of people want to see this going on, but I'm not so sure we're going to get there.
Jim Perry is the founder and CIO of Perry International Capital Partners. Jim, thanks as always. Appreciate it.
Dan, thanks very much. Have a great weekend. Thank you, Charles.
Thank you.
And Jim joined us on the Turnkey.Pro answer line.
The more you listen, the more you'll know. This is Chicago's Morning Answer. Morning Answer on AM 560. The Answer.
Balance of Nature Supplements, changing the world, one life at a time.
I'm 80 years old. I'm a veteran. And the reds and the greens, I really appreciate the vegan capsules from Balance of Nature. So I can definitely tell you it's all one